What if you could predict the next economic downturn with just a few minutes of insight?
That's right. Experts like George Gammon, Stephan, and Peter Schiff are here to help.
In this video, we have distilled their analyses into key takeaways so you can save time and invest wisely.
Stay tuned as we explore the signs pointing to an economic shift, starting with insights from George Gammon.
And don't miss Stephan's perspective on the future of the electric vehicle market.
Plus, Peter Schiff predicts unprecedented growth for silver and gold. You won't want to miss this.
Today, we are diving into George Gammon's insights on the indicators that typically precede a recession.
Gammon highlights rising debt levels and signs of economic weakness as critical warning signals.
George Gammon emphasizes that high debt levels are a precursor to potential economic downturns.
He adds that weak economic indicators can signal a dip in consumer confidence, further exacerbating the situation. Gammon explains that increasing debt levels restrict economic growth, making recovery more challenging.
Indeed, excessive debt heightens the risk of defaults, which can trigger broader economic crises. According to Gammon, a decline in consumer spending often foreshadows a recession.
He points out that when businesses cut back on investments, it indicates a loss of confidence in economic stability.
Gammon stresses the need for investors to remain vigilant as these economic signals evolve.
He encourages adopting proactive financial strategies to help mitigate potential risks associated with an impending recession.
Gammon predicts that if these trends continue, a recession may occur within the next year.
He warns that ongoing economic volatility can lead to unpredictable market conditions.
In conclusion, Gammon suggests that to navigate economic uncertainty, investors need to diversify their portfolios.
He also emphasizes the importance of closely monitoring economic indicators to adjust strategies accordingly.
Today, we are discussing Stephan's experience with the Tesla Model X purchase.
Graham highlights the implications of his decision in the current market.
Graham notes that the Tesla Model X offers significant value for what it delivers.
He suggests that electric vehicles like it are gaining traction among consumers. Graham emphasizes how electric vehicles are becoming more accessible.
Improvements in charging stations reduce range anxiety for buyers. Graham illustrates how consumer demand is reshaping the automotive industry.
This trend is prompting manufacturers to explore electric options.
Graham predicts continued growth of the electric vehicle market.
Innovation in technology will drive this growth forward.
Graham concludes that consumers need to balance their preferences and value in EVs.
Being aware of market changes can help make smart purchasing decisions.
Today, we are diving into the analysis provided by Emily Brown on the challenges in equity markets, as discussed with David Lin.
Emily examines how rising Treasury yields impact both borrowing costs and market stability.
Emily Brown asserts that various indices could face corrections.
David Lin agrees, noting the recent volatility in the markets.
What does Emily point out about rising Treasury yields?
Emily explains that rising yields also increase borrowing costs, impacting profits.
Emily highlights bearish patterns in major indices. What does this mean?
According to Emily, these patterns suggest a looming correction that investors should pay attention to.
What does Emily forecast for the upcoming equity markets?
Emily predicts we could see a market pullback of 15 to 25% with ongoing volatility.
Emily advises investors to monitor Treasury yields closely for market impact.
She also suggests focusing on technical indicators instead of just economic reports.
In today's analysis, we are exploring Gareth Soloway's insights on Bitcoin's performance and its implications for the stock market.
Gareth emphasizes that the recent decline in Bitcoin may indicate broader risks for stock markets and advises caution for investors.
Gareth Soloway argues that Bitcoin's recent drop could indicate significant corrections in the stock market.
David Lin notes that this view aligns with increasing concerns about overall market volatility.
How does Gareth Soloway describe the relationship between Bitcoin and stock market sentiment?
Gareth highlights that fluctuations in Bitcoin prices often affect investor confidence in broader markets. Gareth points out that several important indicators are flashing warning signs.
What specific indicators does Gareth mention?
He notes historical patterns where Bitcoin declines align with broader market corrections.
What does Gareth Soloway predict for the markets moving forward?
Gareth warns that both cryptocurrency and stock markets may face significant corrections soon.
What predictions does Gareth Soloway make for market volatility?
He predicts significant volatility affecting both cryptocurrencies and the stock market.
In conclusion, Gareth Soloway advises that investors may need to reassess their portfolios based on current market signals.
He stresses the importance of closely tracking Bitcoin trends, which could serve as a bellwether for the stock markets.
Today, we are diving into an analysis presented by Peter Schiff on the future of precious metals, specifically his predictions for gold and silver prices.
Schiff forecasts that silver could soar to $100 and gold to $5,000, reflecting his concerns regarding inflation and economic policy.
Peter Schiff believes that the demand for silver will push its price to $100 per ounce.
He further explains that gold's trajectory towards $5,000 is related to ongoing currency devaluation and economic instability. According to Schiff, rising inflation is a crucial factor prompting investors to seek refuge in gold and silver.
He suggests that the central bank's approach to controlling inflation could lead to increased market volatility. Schiff critiques current monetary policies, which he believes will only fuel inflation and devalue currencies.
He mentions that these factors make precious metals a smarter investment choice.
What does Peter Schiff foresee for precious metals?
He forecasts that silver could reach $100 and gold could skyrocket to $5,000, driven by economic factors and market demand.
Peter Schiff concludes by advising investors to consider diversifying their portfolios to include precious metals like gold and silver.
He emphasizes the need to keep an eye on inflation and actions taken by central banks that could impact future prices.
Today, we explore insights from Andy Schectman regarding the future of silver prices in a discussion with Adam Taggart.
Andy suggests that increasing demand coupled with economic uncertainty could drive silver prices up significantly.
Andy Schectman forecasts potential price increases for silver, driven by market conditions.
Adam Taggart elaborates that this positive outlook is supported by rising investor interest and macroeconomic conditions.
Andy highlights that the industrial use of silver, especially in technology and sustainable energy, is significantly increasing its demand.
Thus, silver transcends its role as a precious metal and becomes integral to modern technology.
As Adam Taggart points out, economic instability typically boosts interest in safe haven assets such as silver.
Many investors are expressing concern about inflation, further driving demand for these precious metals.
What are Andy Schectman's predictions for silver prices moving forward?
Andy anticipates that given strong demand, silver could experience notable price increases.
In conclusion, Andy advises that staying informed about silver demand trends and economic indicators is vital for investors.
It's also crucial to keep an eye on global economic conditions if you are considering investing in silver.
Wow, what an insightful journey we've taken through the financial landscape today.
Absolutely. We've heard from Andy Schectman, Peter Schiff, Gareth Soloway, Emily Brown, Stephan, and George Gammon, each with their unique insights.
I found it particularly striking that they all agree on the volatility in the current market. It's truly a cautious environment for investors.
Yes, but their predictions really showcase the diversity of thought. For instance, Schectman and Schiff had differing outlooks for silver's future.
Right. Schectman sees gradual growth, while Schiff is predicting a dramatic rise to $100, which is quite bold.
And then there's Soloway's warning about potential downturns in both Bitcoin and stock markets versus Emily Brown's analysis of equity challenges due to rising treasury yields.
Exactly. It's a complex picture out there. Anyone watching needs to stay vigilant.
If you enjoyed these insights, make sure to like and subscribe so you don't miss out on future expert analyses.
And stay tuned for our next video where we'll tackle how global trade dynamics are shaping investment strategies. Trust me, you won't want to miss it.
Thanks for joining us today, everyone. Let's keep the conversation going in the comments.